Hello everyone, welcome to our new series of बाजार की बात. इन बाजार की बात हम आपके साथ शेयर करेंगे कि जो मार्केट के CIOs हैं, हेड ऑफ इक्विटीज हैं, उनका मार्केट के बारे में, इक्विटी बाजार के बारे में स्पेसिफिकली क्या व्यू है, उनका क्या थॉट प्रोसेस है. सो आज की जो सीरीज हम शुरू कर रहे हैं बाजार की बात, आज की हमारी सीरीज है LIC म्यूचुअल फंड के साथ. सो टुडे वी हैव मिस्टर योगेश पाटिल, हेड ऑफ इक्विटी फ्रॉम LIC म्यूचुअल फंड. योगेश, वेलकम टू बाजार की बात.
Thank you very much, sir, for hosting me here. And good afternoon, everyone.
Thank you. So, Yogesh, before we start, the market information and the knowledge and what you believe, थोड़ा अपने बारे में बताइए कि आपने ये प्रोफेशन कैसे चूज किया, एंड थोड़ा अपने बैकग्राउंड के बारे में बताइए.
जी. First, I start with the background. Basically, I born and brought up in Bhopal, and I done my schooling and graduation in Bhopal, and then I went to Pune for my completing MBA. During that particular period, I certainly moved towards moved towards equity markets and or financial markets. And because my dad wanted to start a business and he wanted me to do a business. Basically, I'm a plastic engineer. So
Acha.
those days it used to be a very fancy business in 1997, 98. So I was doing a lot of things and keep reading about industry dynamics. But I realized one thing कि business करना, business analyze करना एक चीज है और business करना है दूसरा चीज. It's completely different, right? Because then you need to do all things, everything, admin, HR part. तो उस टाइम में रियलाइज हुआ मेरे को कि ये शायद मैं नहीं कर पाऊंगा या फिर मेरे पास बैंडविड्थ नहीं है. वी हैव वेरी लिमिटेड फैमिली बैकग्राउंड and because of limited bandwidth, so I thought कि okay, let's move to my interest area, which is equity market. And luckily, by God grace, I got a entry in equity market. So I started my career initially for first 4 years with equity advisory role. And worked in Tata TD Waterhouse, UTI Securities, Religare, and Van Financials. And in 2006, I moved to mutual fund industry. And I worked in companies like Sahara Mutual Fund for 3 years. And then after I joined Canara Robeco, I worked for almost 9 years. And since 2018, I'm working with LIC Mutual Fund.
Since 2018.
Yeah. So almost 19 years journey, 19 years in mutual fund, and again, first 4 years in basically sell side in the advisory role.
Excellent.
So I have seen both sides and
the buy side and the sell side.
Yeah.
Wonderful. So my question is that there's so much happening geopolitically and geoeconomics across the world. So do you believe the markets have actually factored in globally and in India specifically all these geopolitical and the geoeconomic situation? Number one. Do you also believe that we could probably see a 10% drawdown in the broader markets? And as on date, एक investor जो है, should he continue holding his large positions into the equity markets, or what do you suggest? What do you believe of all this?
Okay. देखिए, global, if you see last 6 months, पिछले 6 महीने देखेंगे हम, तो tariff uncertainty and inflation and war kind of situation both are normalizing. Right? We see improvement in all these activities, and major improvement we seen in on I think on 8th of April, because it's true, nobody can stop Trump except bond market. Bond market is actually make you align what need to be done. It need to be आपको उसके हिसाब से चलना पड़ेगा. We need to follow the bond market, and bond market is again followed by investor choice. So countries like India and global markets got some clarity. They realize it is not easy for US to impose any kind of duty and change the trade structure. Because end of the day, your investors are different. Who is funding your fiscal deficit? And same time, even India-Pakistan war, Russia-Ukraine, and Israel-Hamas, दे ऑल वो भी स्टेज पे पहुंच गए हैं कि जहां पे इंक्रीमेंटल कंटिन्यूटी लिमिटेड है. Everyone is getting clarity. Now, third phase, there is a regulation changing because of supply chain changing, because of geopolitical situation changing. There are 2-3 new sectors actually coming with a big winner, like defense. Defense expenditure 4-5 year back, there are no major countries spending. Like countries like Japan and Germany, I think they increase their budgets. मतलब सभी कंट्रीज ने अपना बजट बढ़ाना चालू कर दिया. दे रियलाइज कि दे नीड टू सेल्फ सफिशिएंट. सबको आत्मनिर्भर बन के रहना पड़ेगा. डिपेंडेंसी चाहे मैन्युफैक्चरिंग होगी या डिफेंस, दोनों पे नहीं करनी पड़ेगी. तो ये पूरे जो बड़ा जो चेंज हो रहा है वर्ल्ड में, इसका सबसे बड़ा बेनिफिशियरी रहेंगे आपका मैन्युफैक्चरिंग. एंड देयर विल बी बिग लूजर्स एंड विनर्स इन मैन्युफैक्चरिंग अक्रॉस द ग्लोब. एंड last 20-30 years, India was nowhere, but today at least is somewhere in terms of opportunity, because of what demographic population, working age population. And for next 20 years, the availability of working age population is only available in India. So forget cost, forget regulation, forget population. So अगर किसी को मैन्युफैक्चरिंग करनी है तो इंडिया में ही अवेलेबल है, बाकी कहीं नहीं है. इवन चाइना में जो वर्किंग एज पॉपुलेशन इज कमिंग डाउन, नीचे आ रही है. तो और फोर्थ जो बड़ा फैक्टर है, आप देखेंगे लिक्विडिटी. ग्लोबली डेट टू जीडीपी काफी कंट्रीज की बहुत हाई है, बट इंडिया इज एक्चुअली इज वन ऑफ द फ्यू कंट्रीज which shown the very much discipline in fiscal deficit and macro environment.
Very true.
हाँ. तो UFU and last 5-10 years, majority of the investors went to US. Now the investor is moving away from US. And emerging market countries, or maybe let's take metals that includes your gold and silver, precious metals, will be benefiting, which is against the dollar. Whatever it might be crypto, it might be dollar index, it might be any other geography. And India tends to benefit mostly because India's fundamental is strongest in the world today. It offers highest growth, it offers a longest growth, it offers a higher terminal value. So valuation could be high. And Chinese economy always, Chinese investors काफी compare करते हैं China market valuation, India market valuation, other market. See, those markets also reflecting their terminal growth. Those markets also reflecting their limited capabilities in terms of like commodity and what is the composition of the index. Right. And again, India is a well diversified country. It offers very broad variety of sectors and we do have talent. तो मुझे ये लगता है कि इंडिया का जो मार्केट है फेवरेबल रहेगा. डरने की ऐसी फिलहाल कोई जरूरत नहीं मुझे. आई डोंट थिंक इट विल बी क्रैश. But again, investing lump sum is again depend on the investor profile and appetite. I request everyone to don't time the market. Either you put SIP, which is in much disciplined way, or don't withdraw it. Because if anybody have view of more than 3-4 years, definitely market looks good.
Sure.
And the fourth is biggest point, what we discussed is there is an inverse correlation between equity valuations and interest rates.
Absolutely.
Whenever interest rates come down, equity valuation goes up. So we have one trigger, and country like India, which is we are expecting good inflows from FIAs, FDIs, because there are a lot of good companies, multinational companies, global companies. They are looking to India for manufacturing. They are looking for JVs. They are looking for local partners. So there will be large permanent capital is coming to India. And historically, if you see any emerging market countries, if you get a more FDI, like a China, other countries, liquidity can create fundamentals. They can change the fundamentals. They can change the perception. Even in 2000, let's take a 4 to 8, we've seen a good FDI inflow and FIs inflow. So FIs I'm excluding. But अगर जब भी ये changes आते हैं, it's good for country like India because India needs manufacturing. काफी बड़ी multinational companies या countries they're looking India as an alternate. Let's take a Japan or maybe Germany, where working age population is very limited, or European countries. See, they have technology, they know what to do, they have money, they have capital, but they don't have manpower. So India is offering a place where they can manufacture, they can sell goods in India, they can export from India. So for them is manufacturing is a decadal story. So earlier, we have a limited exposure in global trade in manufacturing, but slightly tilting toward. You see, in last 5 years,
Absolutely.
defense export versus engineering export, electronics, everything is going up in spite of not major focus.
Absolutely.
Things are turning, and this time global forces are driving this kind of growth, not
Absolutely.
domestic. See,
Hmm.
anyway, Indian players are trying their level best, and even
Hmm.
government tried their level best for making
Hmm.
India.
Right.
So this makes country very important in terms of, and plus we have very good macro factor. Central bank is doing exactly what they're supposed to do. Inflation is next year is coming down, coverage downside. So we are in favorable, and obviously there is some growth issue globally also in India also certain sectors. But I think it will after 6 months or 2 3 quarters things will change because government done lot of things,
Hmm.
and RBI has done lot of things. So things will change. Sector there will be switches in sectors, and because see events creates fundamentals sometimes,
Hmm.
like new reset of global supply chain, new wars is creating own supply chain, and
Right.
everyone is changing towards. And we
Right.
seen in every 20 30 years globally, there is a reset of currency, there is a reset of manufacturing locations, there is reset of consumptions also. So we are getting a once in a lifetime opportunity in some of the sectors and some of the segments.
Sure.
So I
Sure.
continue to advise remain invested.
Remain invested. Sure. In fact, just about a few weeks ago, there was a report by the US statistics on production cost, where the cost of production, as per that report, was the cheapest in India. Uh, so there is a discussion going on that India will become the factory of the world. And from China plus one strategy for manufacturing, it will become India first policy. That is also the thought behind it. Plus, of course, with RBI front loading the repo rate and 100 basis cut in the CRR, definitely uh, now the cost of capital definitely will go down at the same point of time. So, jab hum log, we discuss a lot of people say that mid and small caps again have run up very soon in a very short span. And in fact, market cap has moved for the mid cap quite dramatically in the recent past, about a month and a half. So, do you believe that the mid cap and small cap valuations are getting stretched right now, in your opinion? And आपने जैसे manufacturing sector बोला, is there any other further sector which you believe is looking good for the coming few years ahead?
See, there is a global complete parametric shift and supply chain shift
Hmm.
towards India, right?
Hmm.
So, and fortunately or unfortunately, the most of the industry leaders are only available in small and mid caps. Let's take in capital goods, in basically transmission companies, engineering companies, most of the chemical companies, largest third-party logistic companies, are only available in small cap.
Yeah, absolutely.
See, there is a diversity. We need to choose which company we want to
Hmm.
invest. But my personal or house view is there are a lot of emerging themes. Like one is we see a very drastic change in the perception of government in terms
Hmm.
of, let's take a renewable energy,
Hmm. Hmm.
energy transition. That is
Hmm.
one big capex. Second, the transmission and distribution. India, we are not invested even in globally also. Third part, because of urbanization, demand for power is increasing. Fourth, the biggest driver is today data center. This is the again second thing. Data center consumes more power compared to other industries, and especially in the world of AI, everyone is talking about AI. So AI
Hmm.
requires at least 20x power, more power energy consumption compared to normal search activities. So data center is one growth driver which is growing at 30%, and even considering the power sector is also offering very high growth. I'll give one data. If you see that FY25 and approximately the gross fiscal capital formation is roughly 96 lakh crore.
Hmm.
96 lakh crore है जो ग्रॉस कैपिटल फॉर्मेशन है, उसमें से 38% नॉर्मली रियल एस्टेट होता है, और उसके बाद 10 और 15 रफली सोशल स्पेंडिंग होता है गवर्नमेंट का. देन यू लेफ्ट रिमेनिंग बेसिकली अप्रोक्सीमेटली 40% और 42% इज पब्लिक कैपेक्स एंड गवर्नमेंट कैपेक्स.
Hmm. Hmm.
तो इसका अगर रफली 40% निकालेंगे हम, तो रफली इट कम्स टू 36 37 लाख करोड़, राइट. बट फॉर नेक्स्ट 7 to 8 years, power sector, power ministry alone, they are expecting a capex of 50 lakh crore for
Hmm.
next 7 years. So
Hmm.
I'm saying 10 years, right? 30 in generation, transmission, and 9 lakh crore in generation and 9 lakh in distribution. because renewable energy requires 3x more spend on T&D compared to thermal because of the nature of the business.
Right.
For grid stability, the kind of scatterness, and thermal is like you can generate power at one spot and you can immediately transfer it. But renewable is very different. And because of low PLF on renewable, we require again more capacities. The same for same kind of output. So there is one driver. Second is obviously data center, railways, defense indigenization. अभी तक इंडिया में डिफेंस का मैन्युफैक्चरिंग बहुत कम होता था because India spends almost $80 billion every year approximately, and majority of from basically imports. अभी import होना कम हो गया है. डोमेस्टिक मैन्युफैक्चरिंग पहले अपन सोच रहे थे हम लोग, लेकिन एक्सपोर्ट बढ़ गया उसके सामने. Export has increased. Export has become 5x in last 5 years.
Absolutely.
And
Absolutely.
after the India-Pakistan war, more I think some of the
Contracts
countries
are
were
coming.
really interested for buying goods from India, defense equipments, and some is for ready for sourcing also. There are two demands.
Yes.
One is they're looking for JV by sourcing, and they realize the India potential is very different. India का बहुत potential है. India that proven themselves.
Yes.
They are very much capable for any kind of impact and capability also. Third point, fifth point is your investment in oil and gas. That includes green hydrogen. So if you are सब add करेंगे, if you add up this, the total capex would be not less than 90 lakh. So almost just imagine for next 10 years, 3x more compared to gross fiscal capital formation for public and government capex. Now, because we personally believe India growth story is initially driven by investment and manufacturing, and then followed by your consumption and higher end consumption.
Right.
Because why India is lagging today? Because we don't have jobs. Job creation is must. पहले job creation होगा, per capita income बढ़ेगा, then you see the consumption will improve.
Sure.
Right. And India, obviously, government is doing a lot of things, and I'm sure for next 2 years we'll see results also.
Absolutely.
A large part of the growth will come from investments for initial years, and obviously followed by consumption and discretionary consumption.
So, आपके view में broader markets of mid and small cap is something which the way the demographic of India is changing is something to continue for a very long term.
Yeah, opportunity mid and small cap नहीं है.
Yeah.
Because there are a lot of emerging segments or sectors only available in mid and small cap.
Absolutely. So any near-term events आपको लगता है, which could be there to near-term events which could spoil this great story ahead?
See, it's very difficult to figure out the risk. But my guess are events to monitor is basically final outcome of the US tariff rules and regulations, and obviously how is the World Trade Organization responding to that particular trade and tariffs policies. Second is Fed rate cut, because Fed is waiting for the Trump's final policy outcomes.
Correct.
These are the two major for liquidity, and rest I think from India domestically everything is done by government and central bank. We needed some triggers. And because of this RBI policy and lower fiscal deficit and lower borrowing compared to other countries, there will be one big change I am anticipating. Like for other export-driven countries, where their 70 to 80% economy is driven by exports, so they can manipulate the currency and still maintain the growth and their market share.
Very good point. Yes.
And for a country like India, we don't have that kind of advantage because our exports are hardly less than 20%. So how do India will benefit? India will benefit, Indian companies, especially mid and small cap or MSME, will benefit from availability of capital and cost of capital.
Absolutely.
China's 10-year GSEC is 1.7, India is 6.2. So there is a big gap in cost of capital. That will trigger the business environment in India. New business, more business, better working capital terms and conditions. So overall cycle will change, and this will continue.
Absolutely. Sure. So looking at all these points, how are your portfolios currently, placed? Have you done any changes in your equity portfolios, whether it's sectoral rotations or market cap rotations, broad market, just to kind of safeguard or probably take the ride ahead in the current to the medium term? My question is more current to the medium term,
Yeah,
not the long term.
this is it. From last 1 year, as a house, we didn't change our portfolio
Hmm.
much, and we continue to hold that position because we we continue to believe India growth story is completely driven by investments that include your infrastructure and manufacturing,
Hmm.
and followed by consumption. And we are sticking to that thing because
Hmm.
see, if per capita income will not grow in terms of salary, I'm saying okay, in terms sorry, if we are missing salary growth and job creation, these are the
Hmm.
two major factors we need to monitor,
Hmm.
and these only come from basically either investments, infrastructure, and basically improving the manufacturing environment. And manufacturing is again a outcome of how the infrastructure is placed, government policies, coordination with state and central governments.
Hmm. Hmm.
So we are positive on basically power equipments, power sector, capital goods, engineering, defense, EMS space, higher end discretionary consumption, and we are will maintain. We don't see any major changes going forward because these are the growth drivers of country, and we are participating in that kind of growth.
Sure, sure, sure. So accordingly, आपने अपने portfolios में कुछ समय से you've been doing these kind of changes to obviously get the best potential out of it.
हाँ मतलब changes we done 2 years back, so we are maintaining.
Right, 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 right. So, Yogesh, through this Bazaar Ki Baat series, what message would you like to give to, an investor
Hmm.
who has already stayed invested and someone who's wanting to come in to the markets at this point of time, and to all the distribution partners as well as the mutual fund advisors about the equity markets? What is that one message you would like to give? The second question is Yogesh more moderately optimistic or optimistic about the Indian equity market story for the next 5 years, let's say?
Definitely, for 5 years, I am optimistic.
Optimistic, wonderful. And what message would you like to give to the
See,
investors?
my message is basically don't ignore equity market.
Huh.
Allocation and risk taking abilities of every investor is very different. But kind of scenario and kind of opportunity we're getting, India as a country getting, Indian companies are getting, and these are the some of the opportunities or once in a lifetime opportunity.
Hmm, hmm.
If you miss this, then there will be big loss. See, sometimes what
Absolutely.
happens if you don't, I'm not saying you take it too much of risk, but ignoring a risk itself a risk.
Absolutely.
Because asset allocation is very important because considering the inflation, considering the India is a growing country. If you are missing growth here, obviously we need to participate growth in disciplined manner, not in a lump sum
Hmm,
manner or immediately. Or don't try
hmm,
to time the market. This equity market is very very good for Indian investors in past also, in future also. But we need to behave
hmm.
accordingly to what market needs.
Absolutely.
We cannot time the market. No, सब जब भी कोई इन्वेस्ट करता है सबसे पहले ये चीज सोचना चाहिए कि मैं मार्केट टाइम नहीं कर सकता, उसके बाद ही लोग डिसीजन लेते
Very true. Very true. Very true. So the cost of not being in equity is higher than the cost of being in equity.
हैं. Yes, because you are
Absolutely.
losing your wealth in by inflation and missing opportunity.
Yes. Sure. 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 Wonderful. So, for our viewers, welcome to our first series of Bazaar Ki Baat. In this first series, we have Mr. Yogesh Patil, Head of Equities with LIC Mutual Fund. So, this series is Bazaar Ki Baat with LIC Mutual Fund के साथ. Yogesh, thank you very much कि आप समय निकाल पाए and you could take out time and share all your wonderful insights about the current and the going ahead equity market situations. And also the message which you shared, particularly for the investors and the mutual fund distributors and the advisors as well. Thank you very much, Yogesh, for your time.
Thank you very much, sir, for giving opportunity.
Our pleasure. Thank you.